Yo, what's up, traders? The ones that are in my community know that lately my trading has been going very well again. And I basically today I just want to show a few examples of trades that I took, which went really well, and explain the sort of strategy behind it. It's the main strategy that got me funded in the first place, like a long time ago, and got me like 50 plus payouts. So I'll try to explain a little bit on how you can actually also execute on the strategy. So yeah, if you like this sort of video, leaving a comment, like, subscribe, all that good stuff is very much appreciated. And join the Discord. We're slowly growing and yeah, exciting stuff coming. So just want to show an example of one of the accounts I've been trading, 50K challenge account. I have one like a funded account which got a payout now. I passed like I'm about to pass another account. It's going pretty well. These are the trades, so you'll see them correlate with what I'll show you. I first want to show you this one. I don't think this trade's on it, but this was just a prime example. This was one of the trades that got me the funded account probably. Um, it's just a prime example on what I look for, right? So I'm an area of interest trader by nature, by heart, or whatever you want to call it. And I just find them to be super strong. So if we look at the bottom level, right, like you have like one very well respected touch, you have it's like sort of touch in, but then respecting it, but then going up and then retesting and then going up. Oh, sorry, this is the wrong area. I'm rambling. This one, it tests, it goes up, breaks through, struggles again, tests it, and then goes up. And this is a similar situation what happens where I enter, where it's under, it goes up and then it retests. Here you see it testing twice, creating a double bottom, going up very strongly, tests it perfectly, going up. You can just tell every time price is here, it's at least struggles or it just goes the opposite direction, right? Like pretty much all the time. There's hardly any time where it just goes through instantly, just a strong area. So here where I took this trade, it's basically it was under, right? So you should be looking for shorts, in my opinion, depending on structure, etc. as well. But yeah, generally speaking, whenever you're under an area of interest, it acts as resistance, of course. So you kind of want to look for shorts, right? Here it was under, but then we had like a massive engulfing candlestick pushing through it and then retesting it as support. So breaking the resistance and retesting it as support with a perfect doji. Dojis are like my favorite candlestick. And if you look at what happened after, if we take the measurement tool, after that doji, it basically had like a 330 pips or 3.3k micro pips move to the upside. Like in a little bit of, it took a little bit of time, but it just showing the strength of combining dojis, like rejection candlesticks, in combination with areas of interest. I just found this to be like a really prime example and just having common understanding of, market structure. I only got like a 4.3x, but yeah, I could have had like, if I followed, if I had like trailing stop loss with a 50-minute, I think we calculated I would have had like 16 RR or something. So we have been testing with trailing stop loss as well instead of static RR lately. But yeah, another example, NZD USD. I took this on the stream so you can even see, sort of validate that I actually, traded this live and actually took it, in the last stream I took this one, where you can tell price really struggling, slowing down. And if you look back, then it kind of makes sense. It's like at a pretty strong area. I think on the daily it's probably better. Yeah, if you look on the daily, you just see it, resistance, resistance, support here. So that's 3 times already. Then here it's not really, but then support, so 4 times. And then here like resistance a little bit, but this one is probably cleaner, support. One, not really. This one, yeah, support, support, support again. Like so many times, it's sort of retest this specific area as like, yeah, as support or resistance and going down or up depending on what it was. And here you can see daily price was already struggling on the daily time frame around this area once. Then we had like a very weird daily open. Like the Monday was just very weird. Like it opened all the way over here, like a huge gap. So for me, this was already like a indication that we'll probably go down a little bit this week. And yeah, it tested the EMA, but it went up, and then it created this daily doji, right? Like on the Tuesday. Basically, I saw the daily doji on the day after, and price was up here, and I was like, okay, a daily doji in combination with sort of it already failing to break through the area of interest. Um, and yeah, trying to basically create like a higher high, but sort of failing, in my opinion. That combination just really gave me a pretty big confidence that we would go down. So I entered, not specific, anything specific on the lower time frames. I just saw the basically the daily doji when it was already up, and I was like, okay, there's like a bigger probability, or like a good probability of it actually going down, and with a nice risk reward ratio versus the risk that I was sort of the stop loss I needed to take, like 20 pips. I could easily go for like a 2 RR. I went for 3.8. It didn't hit. I think I exited at like 2.5 or 2, something like that. So nice little returns, but just fairly simple. You just see it struggling at an area, and you just look through the different time frames and see if it makes sense, and yeah, place your stop loss accordingly. NZD USD, here we had like, it was clearly sort of trending upwards, right? But as you can see on the line chart, you just see it not being super strong movement, right? Like this is a strong bearish move, strong bearish move, strong, like strong bullish move, strong, you know, you see it just like moving quickly, like here as well. But as you can see here, I mean, this part is strong, but then as you can see here, the highs get closer to each other, like one high, two highs, three highs, four highs, like very close to each other, which for me signals that it's sort of, yeah, it's slowing down, right? Like the momentum is definitely slowing down. So when I saw that in combination of it hitting the area, because like this is a strong area, as you can see, like a lot of times it goes down from there, like very hard. Um, on the line chart, you can also see it often very well. Like you see it, you know, like on this area, you see it often going down whenever it's under. And yeah, basically just based off that, we saw a sort of doji-ish candlestick, nice rejection candle on the 4 hour, especially after like a strong bullish one. I like that. So we entered, and we didn't close fully at the low because it was Friday, so I didn't want to hold through the weekend or whatever. I think we exited at um, 1.5 to 2x instead of like the 2.8, but overall still good. So yeah, if you want to practice this for yourself, basically you go through the, like I would go for the bigger time frames, the weekly, daily, and 4 hour. But if you trade the lower time frames, you can also do it on the lower time frames, and basically mark up areas where you can really tell that price respects it a lot, where it responds to with big moves, like not the small ones, the big moves basically. You can use the line chart to as well sort of validate, because it uses the bodies, so it only sees the bodies, the wicks don't count. Which I also, the philosophy that I use, I don't really mind wicks too much. Of course, it tell you something of how big of a rejection candle or whatever it is. But structure wise, I use bodies. For instance, if I wanted to test to break above this high, this one didn't because the body closed under, if that makes sense, right? So if you go to the line chart, you'll also see that it failed to close above here, right? But if you look you look at the wick, then suddenly, oh, it did go above this one, not above this one, of course, but I mean, it did go above these. But yeah, the line chart will tell you how it's like what actually matters. The bodies matter most, in my opinion. So you look for an area, strong area, and basically you use rejection candlesticks or bullish engulfing or bearish engulfing candlesticks if you prefer those. And you match that in combination with the area of interest. You can also add the 50 EMA, which is really strong. And yeah, just do some testing. I'm sure you'll find some nice results. It's basically the strategy that I've been using that got me all the success in trading that I've had basically. So yeah, thanks so much for watching. If you're still here, again, leaving a like, comment, all that good stuff, very much appreciated, and join the Discord. And hopefully see you in the next one. Thank you. Bye bye.